The Responsibility of Investing is a podcast by the PRI, the world's largest global body on responsible investment, representing over $128 trillion in assets under management. Each episode features conversations with thought leaders and experts from around the world, exploring how sustainable factors are transforming the investment landscape. This series helps PRI signatories and the wider investment community navigate responsible investment with greater precision and confidence for the benefit of both investors and society.
Hello, and welcome to The Responsibility of Investing, the PRI's podcast. Today's program is about asset decommissioning and what it means for responsible investors. My name is Nathan Fabian, the PRI's Chief Sustainable Systems Officer, and I'm joined by Julien Halfon, Head of Pension Solutions at BNP Paribas Asset Management. Thank you all for joining us. As we contemplate an industrial and energy transformation to decarbonize, we must consider what we do with the aging and polluting assets, and whether our management of these assets at their end of life can accelerate or hinder our low-carbon transition. Now, BNP Paribas Asset Management reports that there are $7.5 trillion, I think at least, actually, $7.5 trillion worth of unfunded asset decarbonisation costs in our energy to industrial systems. And, they're doing some very interesting work to help us deal with it. So let us go to Julien and hear his story. Julien, let's start with that 7.5 trillion of unfunded assets. Where does that number come from and what does it mean in terms of our climate goals?
The origin of the number is a very long, drawn out, about 8 months desktop study, top to bottom. We really looked at everything. All studies, regional, local, sometimes also at the level of entire continents. They've been delivered by institutions like the World Bank, like the European Commission, many local regulators. And the interesting thing is that they were done on, let's say, essentially two principles. You assess a long-term installation infrastructure, whatever it is, offshore, drilling stations, could be a mine, could be a coal-fired power plant, and you try to assess how much it would cost to clean up the environment, remove the installation, and then return the entire area to what it was before anything was built on. It's worth noting that the concept was developed essentially for the nuclear sector at first, years ago. You can't really imagine anyone abandoning a nuclear power plant with radioactive waste fuel. So it was extended to other, I would say, brown assets, to summarize, but there's many new renewable assets that will have to be decommissioned at one point. So the 7.5 trillion was actually an analysis of every single study, and roughly that we came up with about 8 trillion, and about 500 billion have already been prefunded for the nuclear sector. It accounts for about a third of the liabilities for the nuclear sector, but for all other sectors, there's very little prefunding, meaning that most companies involved have provision on balance sheet. A rarely established reserve. We have a few. They often our clients. That's a good side of being at the center of the network. But at the same time, the needs are immense and they are evolving, because when you look at the 7.5 trillion unfunded, often the numbers do not include the social aspect, meaning when you close an installation and any sort of activity, what do you do with the former workforce? Where do you reinsert them into the labor force? How do you treat massive unemployment? If you look at the UK, the northwest part of the UK, which is directly linked to the North Sea, especially Scotland, North Sea oil development, what's going to happen to them? It's unclear for the moment.
Yeah, that's very interesting. When you start to bring in the social dimension, the transition challenges start to become clearer. I don't want to de-emphasize that point because it's very important. But if we think about the assets themselves, wouldn't it be reasonable for a responsible investor to say, well, actually, I don't want to be near these assets. These are assets that I need to be out of and the economy needs to be out of. So why is this so important to responsible investors?
There won't be any transition without production of energy. and a lot of the equipment and material that we need for the transition. For example, copper, one of the main commodity that is required to push up in the transition, energy transition, and general transition of the economy. The issue is that mining copper is quite polluting. It's actually extremely polluting. A lot of tailings, a lot of earth moved out of the mines and left most of the time left completely alone. Nobody treats them. In Canada, for example, you have a few thousand mines, copper mines have been completely abandoned. And suddenly you realize that not only you close the mine because the mine is completely dry, there's no more copper to extract. But on top of that, you realize that the entire environment has been polluted. The local communities are affected. They're not employed anymore. The local authorities, which had a budget, which is not at all balanced. So when you look at all this, you realize that you can't, as an investor, if you invest into the transition and you stop investing, first of all, it's going to be not going to be great for your long-term profit. But on top of that, there can be a lot of ripple effects. Other areas of same regional space can be affected by closing a mine and closing completely the activity. So there's a number of areas where suddenly the profitability of your long-term investment plan is critically affected by one or two investments. For example, the copper mine. So this is the issue that people have been struggling with, because closing down polluting assets could be done, but then we would be at a standstill for the energy transition and for long-term profits for the investors.
Yeah. Okay. It's a very good example you give, in that if you're part of diversified investment approach across the economy, then you've got exposure to the transition. So you've got no choice in a way. You've got to grapple with this question. So that's very interesting. So something I wanted to pick up building on this is this idea of asset stewardship, because it's an idea we've been talking about in responsible investment for a long time, active ownership and stewardship. And in a way, you're introducing a dimension of stewardship here, which has multiple facets. You're really thinking about this end of life phase and this transition phase. So do you think that there is a responsibility for the steward, the responsible investor, to stay engaged in these assets right through to the end, and therefore that they have some important stake in how these assets are, when the end of life is, what's done with the income, who bears the cost of remediation, etc. Just talk us through that aspect of stewardship.
It would be very short-sighted to get out of it thinking that you took all the profits and then you leave complete the decommissioning, the cleaning up, the rehabilitation, land rehabilitation, restoration to someone else. Simply put, you may end up paying more taxes, because if it's someone else, it's going to be the government's going to be the taxpayer. So it's pretty much secular here. I won't say there is a zero-sum game. It appears that there is a zero-sum game on the first assessment. And I think the actual stewardship can bring a lot of value as soon as you realize that, let's go back to the copper mines, because I'm working with, I will be on a webinar next week with Canada. If you start to realize that actually tailings contain gold, this is an interesting proposition. Suddenly you have copper mines which are dry, but then you have tailings with gold. And Majory, the global jewelry company, has been built on remining not the mines themselves, but the tailings, and extracting gold and creating jewelry. So if you are a very engaged investor with a proper stewardship framework, you can suddenly realize that ending an asset doesn't mean ending the profit. Profit can take a completely different form. It can be the shape can be absolutely, well, you can't get any more different than copper mine to jewelry. And Majory, with whom I'm on the webinar next week, has 54 shops around the planet. It's actually a big success story based on remining or cleaning up some of the tailings and extracting the gold from there. They're going to extract somewhere about 100 kilos next year, from 10 this year. Growth of 10 times. I mean, you don't see that very often. This is exactly the sort of things that stewardship can bring if it's done properly. That you see not just an asset that's going to be closed, it's not just a legacy problem. Decommissioning, cleaning up, it's not something that you have to do and say, okay, I have to pay, it's going to reduce my profit, but potentially an opportunity for redevelopment, repurposing, looking at the future. And most of the new assets that you can redevelop, and this is where I think the critical aspect of decommissioning and redevelopment, because the two of them are part of the same ecosystem, is often missed is that once you have a mine or a coal-fired power plant or some sort of refinery, it's usually part of a very large hub. You have electricity, you have transport, often you have population. So you have all the elements to redevelop something that can be extremely profitable. The case of Madrid will be an extreme case. Let's put it aside. But you have plenty of, for example, wind farm redeveloped on offshore drilling stations. The installation is already there. You already have cables going to the station. So you can, instead of only one way, the energy goes one way, you can put it going the other way. It works. Same thing in many areas. One of the most interesting cases, nuclear power plants. The nuclear power plants themselves are not big buildings. They're actually quite small. I mean, they a few hectares at best. However, the land on which they built is huge. Usually, you don't have anyone living probably a couple of miles around the nuclear power plants. So you have plenty of space. So you can even imagine easily transform a nuclear power plant immediately while it's finishing its end of life, and it takes about 10 years to completely decommission physically a nuclear power plant. Then it takes about 100 to take care of the radioactive waste fuel. But you don't need to wait all this. Do you have actually an opportunity? You have land, and in a part of the country relatively isolated, completely plugged into the hub, the grid. So why not trying to leverage this? If you do your job correctly, I mean, I'm talking about also Stuart, we have a really strong stewardship at BNP Paribas Asset Management. Jen and Baxter, our boss, does really great job there. This is one of the areas of, I think, was exploring. We actually are working on developing new funding instruments to help this sort of things. Redevelopment, transition bonds, for example, will help close one part of the polluting assets and redeveloping something which is a lot greener, a lot more sustainable.
Yeah, so it's very interesting. So you're obviously adding technical capability and ideas and instruments or mechanisms that can allow the finance to be allocated here. So how are clients or investors reacting to this idea?
Extremely well. Extremely well. We've been surprised by the reaction. It started about 7-8 years ago. We started to test large institutional investors, big pension funds, or big asset managers on the concept of decommissioning bonds. We said, look, we need to clean up. Often there's no reserve, so we have to build up a reserve first. It will take 10, 15 years. So if we build up a reserve now, if the cost of capital is low, we can have a positive carry by investing the money for a number of years. So why don't we come up with a new funding instrument? We call that transition bond or decommissioning bonds that will raise money, and all the proceeds will be allocated to a reserve or to an activity that will take place 10, 15 years in the future. In the meantime, it's invested at really nice market returns, higher than the cost of capital. The reaction was extremely positive for 2 or 3 reasons. I think the first one is that decommissioning is actually a very easily monitorable activity. You know, if there's something is open, something is closed, you can see already what happens. I mean, a number of platforms on the North Sea that are closing, or the Gulf of America, depending where you are, in California, you can really see them closing down. It's not that difficult. You can also monitor the emissions. That's you're in a region, you can check what's happening with CO2 emission or any other greenhouse gas. So it's really easy to check what's happening. You're also doing something which is extremely green in the sense that you're closing down a brown asset and you go to zero in terms of there's no more production. So you really removed a polluting asset, a coal-fired power plants, a coal mine, probably one of the couple, I would say almost diabolical couple of a coal mine and a coal-fired power plants, extremely polluting situations. If you remove them, you can really see the benefits immediately. And on this area, those lands, the site where you closed all brown asset, you can redevelop green assets. So you go almost 190 degrees from brown to green. Takes a bit of time. It's not going to be immediate, but you have a plan. You have a trajectory, which is very, very easy to see and very easy to monitor. On top of that, to be honest, I think most investors want to get involved into cleaning up the planet. It's not as if they refuse. So if they have multiple vectors, one is stewardship, so talking to the boards. The other one is funding decommissioning reserves. That's just one more instrument, one more lever that they can use to clean up.
The interesting thing when you say transition financing and transition bonds is that really you're actually contemplating transition to an endpoint, which is often missing in the rest of the conversation around transition finance. So Have you been able to make some issuances for these genuine transition bonds?
The first one was a few years ago by a nuclear enrichment company. So it's between mining and nuclear. They extract uranium, and it's Urenco, the first one who did it. They did it for their reserve, the decommissioning reserve in the US. Then now within government bonds, so it's difficult to see if it's purely transition in general purposing, you have more and more allocations to close down coal-fired power plants. Slovenia was the last case a few months ago. So you do have now, it's embedded into the general policy. We know that if we put money aside now, we raise money, put them aside, people are going to come and buy it because they can really see that you're closing down something that they don't want. So it's getting part of the general, I would say, financial tools that you use to implement the transition. If you look at the problem from a purely financial standpoint, this is where it gets even more interesting, I think, for investors. Decommissioning is part of the environmental liability world. It's a liability. It's actually a real liability. You owe money to the planet. So switching a environmental liability for a financial one, from a balance sheet point of view, is neutral. The only thing is that you're crystallizing the cost. That's one of the sort of drawbacks, and your debt capital ratio start to sort of deteriorate slightly. But the redevelopment of the assets, the new one, is something that a lot of institutional investors are really interested in because they're green assets. And this is more done out of equity. So you have now a slightly different view of the world, saying part of the cleanup is through debt, switching one debt, the environmental debt, for another, financial, a bond, or a loan. And redevelopment is private equity, or it's VC, it's new ideas. And this is something that couple is very attractive to many, many investors. And you can see it's beyond the financial aspect, which are clear, because if you transform an old coal-fired power plant or into a data center, you can imagine the demand there is now. There's France has 38 sites. I think a couple of them are actually on old factory, industrial sites. So it's really, the logic is applied everywhere. You also have a moral, I think, aspect. It's like you're doing good with your investments. This is what a lot of investors, we're working closely with the Church of England. Adam Matthews is really involved with us on this, and we can really see the future. I would say I'm smiling a bit more lately. I used to be a bit more pessimistic.
No, I understand. This is very compelling because of its concreteness, its clarity around what you're doing with the assets and why. But surely there's some challenges here. We know that governments change their minds on assets, especially energy assets, refurbishing and trying to extend the life of polluting assets. We've seen it many times around the world. And also, as some of these aging assets change hands and maybe have equity owners with much smaller balance sheets and who are not genuine stewards of the assets, surely there's some risks because of the different types of investors in some of these assets at their end of life, and because governments change their minds. So have I got that wrong? Am I overreading it, or are there genuine risks here?
No. Let's start with the corporate owners of those assets.
Yeah.
The first issue is that the amounts that we announced from our top-down analysis, 8 trillion and 7.5 unfunded, you can't really reconcile them with the balance sheets and the financial statements of corporations. What we noticed is that the numbers are miles away from the total. What we come up with 600 billions, that's all we have. So not even 10%, looking at 160 listed companies. One of the new approaches is to actually disinvest from those holding assets and sell them to private funds, which do not file in the same way. They don't disclose some of the liabilities, and all have the same financial capability as the original owners. That creates a bit of a challenge. Those private equity firms often try to push the use of the assets to the limits. They want to track the last cent or dollar of value. And they're not always financially sound or as financially sound, meaning that their decommissioning objectives may be very different from the original owners. And they may be in total conflict with the needs of the local communities, even the government. Why is the government accepting this? I'm sorry, I don't have a view on this. I just say that it seems that continuing activity may maintain employment. That's what we've seen in many cases. However, over the long term, I think that's not a sure bet. That would be a good thing for the economy if the activity being managing coal-fired power plants. We know that's, every single projection from International Energy Agency, from the World Outlook when it comes to electricity, showing this is something that's going to die in the next 10 to 15 years. But many governments, like many corporations, have very short-term views, and maintaining employment, increasing profit for the next 2-3 years seems to be more critical than establishing a sound energy system that will be sustainable and protect the environment. This is one of the reasons. The other reason that I would like to mention is slightly different. It is potentially ingrained in the entire concept of specialization. If you are an oil and gas or mining company, and I have counterexamples, and I can mention one, but you often know how to set up platforms. You can even drill wells. All those things, dig mines, but you're probably not exactly the expert in data centers or wind farms. So you probably also have a problem here, is that the views of some of the specialists within those companies. I'm an economist by training. You ask me about financial products and long-term investment, macroeconomics, I can tell you. If you ask me to build a house, I'm not an architect. I can build one. I'm not sure you want to live in it. That's why, let's be completely honest with this. We should suggest that you do not. But I think there's an issue here, is that the system is not rewarding innovation, potentially the idea of transitioning your own company to new activities, except that some people are doing it. Or we're working with an oil and gas company which has already developed their own decommissioning activities, removing offshore wells and platforms, as well as investing in new technologies themselves. So you do have the exceptions. But what we're seeing for a lot of big oil companies, this is really slow. They deal on the pay-as-you-go year after year. They don't seem to have a long-term plan for decommissioning. Same thing for mining, and mining is starting to weigh. The liabilities are getting bigger and bigger. So we think that it's potentially also a system-wide hurdle that's not helping the transition, with not bringing new ideas, new ways of funding, potentially speeding up the activities, developing new businesses. Although if I was a mining company, frankly, given a number of mines, just the 80,000 abandoned mines in Australia, the 6.5 abandoned wells in the US, I think this is a good business case. I will try to create something. I don't know for the future what the future has in store for me, but I think there's enough of a business case to do something. But this is, I think, a second issue that people should keep in mind, is that one of the issues with nuclear power plants, for example, most engineers, they build nuclear power plants. Asking them to dismantle them is not that easy. You need other specialties, and a completely different training.
Yeah, no, I think that's very important. So a message for the LPs out there to think about with their private equity exposures and what's exactly going on with these assets, but also thinking about this is almost an accelerant to transition, because you're focusing on the innovation and the possibilities for these sites and these assets as they genuinely transition out of their legacy activities. And of course, I guess that does change the conversation with governments.
Completely. You have a case that nobody realizes is potentially the most visible for 2024, is the Olympic swimming pool in Paris. It used to be a gas refinery, a gas terminal for one of French utilities. It's been repurposed as a swimming pool, and now it's going to become social housing. So you have examples, and potentially anybody living in London know the Tate Modern and the former Battersea Power Station. You have in front of you, everybody can see that. But it's not yet completely ingrained that we are in a world that is transitioning. It's not only energy, it's everything. And none of the activities that we have should be seen as set in concrete. You have to think a bit out of the box most of the time.
Yeah. Well, the interesting thing about this story is that problem solving and the role of private finance is actually helping of its own capability and insight to this transition from this story that you're telling, which is really very encouraging. In my preparation for this session, I heard you talking in another event around a lot of the aging fossil fuel assets and industrial assets that will need to come out of our system over the next decade or two will suddenly intersect with the aging of the first rounds of renewable infrastructure investment, which seems to create a bit of a systemic crunch point, is what I understood. That's actually going to be quite difficult to navigate. Can you just tell us your thoughts on that?
Yes, that's going to be a big issue. The progress that we have seen in wind and solar has been immense in 20 years. But we started building them more than 20 years ago. Some of them date back the late 80s, early 90s. And many of those assets, especially in the wind farm sector, are going to be removed because they are not only too old, but also not by definition, by design. They're not as energy efficient as what we have now. So that's going to be an interesting deep question. First of all, there's a fundamental issue. Some of the equipment that we use, and especially the composite material that are used for the blades of windmills, are not fully yet recyclable. It's a bit of a worry. I'll give you the possible outcome, but there are optimistic views there, but it is a bit more expensive. Secondly, that's not always easy to go middle of the North Sea, such remove blades from, it's actually as difficult as doing a topside for the entire field, let's say, compared to a topside for a platform, a offshore platform. So there's really complex, literally physical question that has to be answered at one point. The problem is that will happen when we will reach roughly the end of the North Sea in Europe. So in the next 10, 15 years, you have some wells that are going to be going on for another 30 years. But a lot of the old installations will disappear in the next 5 to 10 years. Stop producing at least. So they will be they would plug and abandon for the moment. And then after that, they have to be removed. But that's going to be a bit of a problem. So there's going to be a critical moment. People will have to look at how to transition, the transition period. I don't know if it's a double transition at that point. However, if I look at what's happening in China and Australia, I cannot help remain very optimistic. Australia was nowhere in renewables less than 10 years ago. And the leap that has been literally incredible. You probably know that better than anyone else. The speed at which China has been developing renewable assets is also very, very surprising. And so very positive. So we can imagine other countries in Europe, Northern Europe, Norway, UK, but more specifically Scotland, eventually Iceland, will learn the lesson and apply the same ideas. That's potentially where we will be going. Another element that is really interesting is that sort of mitigant to all those technical complexity of removing windmills from the middle of the sea is that there are new technologies being developed now to be more effective when you remove them. It took us about 30 years to develop the best boats to clean up offshore drilling stations. Same thing is happening now for wind farms. So in the next 10 to 15 years, there will be more effective way to do it and more cost efficient. So there are also positive aspects, but all this will depend on how fast we are also developing AI, how fast we are in bringing in technological solutions, and not just pure physical power, because we know that's not the answer anymore.
So it sounds like the work of governments and regulators is quite important thinking about these assets. Is there specific policy supports that are needed to make all of this work?
Yes. It's interesting because, as you announced, with my title is the head of pension solution. And I think there's a number of lessons from the management of defined benefits pension plans that could be learned for decommissioning in general. The governments in general, not only the UK or the US or the Australians, haven't really created a legal framework conducive to people putting money aside to close down and pre-fund the closing down and decommissioning and rehabilitation of those assets and lands. If they were, they can just copy literally the pension framework. For example, they could create incentives by allowing the contribution to be tax exempt. That would be first thing. You create a fund, you put money into it, exactly for a pension fund, you don't pay taxes. Also, the fund itself should be tax exempt, so the profit that accumulated are only dedicated to cleaning up, so that should be also tax exempt. I think that would be the first good measures, especially for countries who have already managed large amount of defined benefit pension funds. So it's not something that will not be a surprise. In US GAAP, concept of environmental liabilities is being renamed asset retirement obligation, exactly a pension benefit obligation. So we are really in the same logic from a financial and I would say also regulatory and accounting standpoint. The other part is that I think the government has been very short-sighted when it comes to the local development, local communities. And one of the issues in the UK, for example, we noticed that the private sector pension funds are fully funded, but the local authority pension funds are seriously underfunded. So if you do not find a way to create activity locally fast, you keep on having years and years of worse endemic unemployment, you will have serious issues over the long term with the stability of your regional finances and local finances. So I think that the government should also be very, very supportive to any rehabilitation, restoration, repurposing activity happening locally. In the UK, Port Talbot, you have plenty of other places on the west coast, should be areas of immediate activity, saying, you know what, find a way, exempt anyone doing any work and give them concession to redevelop eco parks, eco hotels, intelligent business centers, as has always been the case in Norway, in Denmark, in Holland. Plenty of those countries have already done that. So there's nothing new. We don't need to invent anything. In a paper that I produced in June, I was talking about North Sea, creating a big reserve fund for the North Sea for all the producers who haven't really prefunded, could attract not only capital coming from big institutional investors because they would be decommissioning bonds and people are very likely to buy them, but also capital coming from VC firm, private equity firm who want to create businesses locally by coming up with innovative views. I do believe this is the only way to not only ensure the long-term success, but also to help the local communities coming out of a problem that is only getting worse. If you look at what's happening not only in the UK, but in Canada and Australia, we have entire cities in Australia, so towns, let's say, maybe not cities or towns, which are dependent on one or two mines or mining centers. So what do you do when those things are going to close down? Those communities are going to be completely destroyed. We've seen it in the past. It's nothing new. We've seen it in the 70s and 80s when the old industrial world disappeared. So I'm not sure we want to go into another industrial transition in the same way. It's especially because it's not needed. There's plenty, as I mentioned earlier, plenty of other solutions, and many of them have already been implemented.
Yeah. Okay. It does sound like there is a little bit of heft that we need to give on the policy side so that there's enough support to deal with this challenge. So just as we look forward, what do you think will be the major signposts or the major stages of progress we'll see in the development of these markets really in the next few years?
The two areas which I think are going to be critical. Now people start to adopt those transition decommissioning bonds. So this is already started. So we're going in the right way. ECMA and other capital market associations are starting to look at the terms, all the different features of those bonds. So this is being taken care of. But I would say the policy views from the government, meaning that they potentially don't have much more time left to do something right. Otherwise, they're going to have to face a wave not only of assets to decommissioning, but a wave on unemployment. The second wave after the 70s, 80s, which is a lot worse than the first one, especially now that AI is affecting every single company, and many companies like Amazon have already started to lay off people because they're using AI. So we are going to need to find other areas. But that's the pull factor. But there's a push one, the push factor. The pull one is we have prime industrial and economic real estate, meaning that all those assets are plugged to hubs, to networks, to grids. And instead of wasting time checking how long we have to keep the asset because we cannot restore it right now, we have to wait another 10 years and just don't plug and abandon it immediately. We should be very, very, very encouraging, both at national levels, government level and corporate investor level, saying, try to find now, close those assets earlier. There's potentially on top of that a little bit of kicker from a carbon credit transaction, potentially, and redevelop them into stuff that we need. data centers, wind farms, solar farms, but also a lot of new activities around the ecosystems in which we live, and fisheries, more eco farms, all the stuff that we know we need. And the installation is already here. We don't need to reinvent the wheel. We just make sure to clean them up correctly and give opportunities to investors to come up with the good ideas. I don't think that neither big companies, as I mentioned earlier, because they in mining, energy, extraction, and other industrial, nor the government are in the right position. They don't have the ideas and potentially don't have the networks to create the future. I'm very positive because I think the future is going to accelerate very, very fast. The adoption, of AI in not even 2 years, barely 2 years. It's November 2023, the first time we heard about ChatGPT and OpenAI. It's now 1 billion people on the planet. So about one person out of 8 on the planet is using it. So that tells you at which speed these things are going to go. So new ideas are going to appear all the time. But some people should realize that they can't stand and they cannot delay something that is critical. Because for anyone who lived through the 70s, I still remember as a teenager in the early 80s, the number of demonstrations, strikes, and the disruption to local communities that the end of the industrial period meant in France. I don't think it's something anyone wants to go through again. There's no need, especially because we have all the tools to do something which is sustainable, which is completely decarbonized, moving in completely different direction. And we need it. And let's be clear, I'm suffering from asthma, so I see what it means in Paris having pollution. So this is something that is critical for many people. And we have assets which, if taken at the right time, in the right way, funded by the right people, can be bearing a lot of value for the next few years.
Yeah. Okay. Well, thanks for drawing out both the principles and the standards that can help a market scale. That's very important that you describe. And of course, that element of actually identifying the longer term value, which is that question and uncertainty over how to transition the value of these sites and their infrastructure and their importance to communities, how to positively transition that to future value has hamstrung our transition conversation. And so you're offering us a vision there that I think many investors will be really pleased to hear. Julien, we're going to wrap up now. I think you know that our podcast is called The Responsibility of Investing, and we always ask our guests a question. Feel free to answer from any perspective. So what do you see as being the responsibility of investing?
I think the true responsibility of investing here is to be not only at the forefront, but also the underpin of the new ecosystem. That ecosystem is now linking innovation, but also governments, investors, NGOs, corporate entities, decommissioning entities, which are often not the same, by the way. There are plenty of things that are happening at that level. As well as, I would say now we have to go back to drawing boards, meaning universities, research centers, all those elements, all those stakeholders of the new ecosystem can be tied up to that and supported by the financial system and by the investors in particular. So I think this is really the role that I see for large investors. I mean, they've done wonders. I mean, when I see what's happening with the Norwegian sovereign wealth fund is doing in Europe by supporting new technologies, what's happening, most of the large pension funds on the planet have at least 20% in liquids, meaning they're taking risk with small investments, venture capital. All those things are already happening in many domains. I think in decommissioning and repurposing in the future, it's even more critical. And if I have only one wish, is that 20 other people to take my position. I mean, I'm getting older, so at one point I would retire and start to push the concept of decommissioning everywhere and link completely to repurposing and redevelopment. Because I think this is an intergenerational link that's much stronger than anything else. Cleaning up the mess that some of us did, to be honest, because it was under our watch, and offering our children something that works a lot better.
Well, thank you for bringing back in the stewardship dimension and the genuine intergenerational stewardship of value. We really appreciate that. I'm sure the listeners will as well. So Julien Halfon, thank you very much for your time today. To our guests, thanks for joining us, and we'll see you next time.
Thank you, Ethan.